Good afternoon, good evening. This is Nikki Yu, also known as Facelesstrader, and you're watching a free class this Friday, July 31, 2020. The topic is entitled Making Money While Sleeping. Quote unquote, hard work is involved before markets open. That's what they don't tell you. Yes, we do make money while we're sleeping, but we actually worked hard for it before the market ever opened. Our website is www.awesome10x.com. My Twitter handle is @Facelesstrader. Please do follow me also on YouTube, Awesome10x. This is a replay. You'll watch a replay of this if you can't come. This is every Friday, 5:30 to 6:30 p.m. We'd like to invite all of you, all of your friends, and to come actually and listen how we make money globally. So let's start. Just wanted to invite everyone. Yes, we do charge 2,000 pesos for a month. That would be $40. If you wish to find our inner circle, Awesome 10X Inner Circle, you could register now. The website is bit.ly/awesome10x. We do provide a daily Zoom live class every day, Monday to Friday, 5:30 to 6:30 p.m. The classes would be similar to what you are watching now, 24/7 live assisted trading guidance for Philippines and US stock markets. We have an exclusive Slack channel and also a Viber channel for all of the people who wants the Awesome 10X stock picks. You can contact Rach 63917-531-8949. And that's all. Okay, so let's begin. How do we invest? Investing is actually seeing the future. So expectations would change every single day. Someone would write a story and then, someone will actually say anything about the stock and it could go down. It's very impossible to actually catch all of the short-term moves, but, it happens all the time. A quarter could be bad. So the best investors in the world do not get persuaded by stock blips or charts. In the end, it's about staying ahead of the curve. It's actually anticipating what the newspaper headlines will say next. That is what investing is. Your portfolio should reflect what the future is. Now, investing is not a walk in the park. Wealth doesn't come from just taking risks, but it's actually constantly taking risks. You can be a long-term investor, but you constantly have to adjust your sights to the next big thing. We may be in the midst of a long cycle. For instance, the British 100-year-old industrial boom, but that doesn't mean that you can buy and hold and then go to the golf course by noon. Wealth is actually a never-ending process. So is running money. You cannot just walk away and ask about the meaning of life. It is my life in the Philippines. I'm a Filipino. Investing is my life and all-consuming. Now, what does this mean? I thought that you make money while sleeping. Because investing, as I said, is buying and holding a company, but you're actively tracking. You know what you own. You know what the quarters were. You know what's happening in the company. You are choosing to hold passively, knowing what's happening. So you actively actually track the stock, or at least the company. So evolution is simply constantly changing some of the precepts of investing correctly. Innovation is not a big breakthrough every single day, every time. In fact, innovation is a constant thing. But if you don't have an innovative company coming to work every day, you don't even have a company. You are getting ready to die at the vine. That was said by Jack Welch. The best quote might be from Amazon itself, which we will discuss later, how that company kept on innovating as if every day was day one. Now, the question is, what is your edge, or what is the companies that you are investing? What are their edges? Investing in companies with great long-term prospects involves, Jim Buckhart said, I check all the stats, economic indicators, earnings, numbers, all that garbage. Everyone has them, but they don't provide much edge. In fact, my real edge is know the headlines before they appear. There are a bunch of long-term trends that I pick a few that I really believe in, and then I extend them far enough so that I can write tomorrow's headlines today. I might not be always right, but I usually get pretty close. It makes all the noise go away. So he basically says, predict the future by knowing the long-term trends. Go with the long-term trends. Because changes are what you can make money on. Change is the key. Things that would stay constant are growing too slowly. They're too dull to invest in. The economy growing 3%, 4%, the bonds yielding 5%. Ho hum, why invest? Why invest, guys, for 10%, 3%, 5%? You're investing for change, and it's a lot of changes all the time. That's what hedge funds thrive on, and that's where you can make money on. Said by the guy I like most, Andy Kessler, running money. He is a hedge fund manager, retired, so rich. Yeah, but I'm pretty sure he's investing anyway, even if he is in his family office. You have to invest early in trends. So in 1792, when the gin was invented, no more than 150,000 pounds of American cotton made its way to England. 8 years, it was 17 million pounds. 150,000 pounds of cotton to 17 million pounds. By 1850, there was 700 million pounds of cotton exported to England. To put this in perspective, in 2003, 5.6 billion pounds of cotton were exported from the US. That is a factor of 5,000 growth, 5,000x in the first 58 years. So cotton grew by a factor of 8 for the next 150 years, or a puny compounded rate of 0.1%. You have to be early on the trends. That is where the money is. How about industrialization? The world was changed by electricity at the turn of the last century, or by the radio in 1920s, or television in the 1950s. How about automobiles? Do you know that in 1950s to 1960s, General Motors was the most innovative company then? 50% of all cars were Ford, Henry Ford. He was an inventor. He was the Elon Musk of his day. Industries supply the product more and more cheaply. An entire consumer economy was built around these cheap, revolutionary products. How? Washing machine? Cool. At that point in time, washing machines were inventions, guys. A refrigerator and aircon was an invention. Entire economies evolved to supply this stuff. Japan with consumer electronics and then cars. Taiwan and China with all sorts of manufacturing and assembly. These are all remakes of the Industrial Revolution movie. Industrialization was not some master plan to remove workers from their century-old tasks. Instead, it was a complete re-engineering of life based on the ability to provide daily staples at much lower costs. Getting everyone together in one steam engine-driven factory produced higher quality and lower cost textiles than anything done at home by old spinners. As long as England could keep prices for cloth down, growth was created and protected by its own declining price elasticity. Now that is something we want to invest in. Gets railroad mania, 1840s. A railroad mania was raging, selling on multiples of passenger miles, a precursor for multiples of page views that Yahoo stock would trade on 150 years later. Inventor named Charles Babbage complained the railroad mania withdrew from other pursuits the most intellectual and skillful draftsmen, and sought to invent a machine that might replace them and make Yahoo possible. Charles Dickens marveled at railroad wealth. Investors made money, investors lost money. In the best and worst of times, the railroads got built. People and goods were shuffled about more and more cheaply. The Industrial Revolution hit its stride. Today, what is the revolution? Do you guys know what it is? It's the cloud. Data. Data is the new oil. Suez Canal era. The next barrier to broken was the distance to India and the Far East. After 10 years of construction, the Suez Canal opened in 1869. Transportation costs dropped yet again by a factor of 3 or more. And as importantly, distance and time became deterministic. The trip from Malaya to England to deliver tin exactly took 3 months, which was the same time it took for copper to arrive from Chile. This allowed commodity exchanges like the LME to create 3 months of forward contracts. So, what are the answers? Always think in terms of megatrends. Elasticity, when prices go down a lot, you stimulate new demand, you set yourself a growth business. I told you guys this answer already, so I will give you a clue. What is the cheapest form of energy? 40 years ago was $100. Now it's 1 cent per kilowatt. What is that? The answer is solar. Okay, I always think of megatrends, economies of scale. Keep figuring out what makes Silicon Valley work. Figure out what works in Wall Street. Figure it out. Every monster stock has a monster market. It could start $100 million. You could be the leader of a small market, but that doesn't mean much. But what if it is $100 billion industry? What if it is $1 trillion industry? What is that valuable company that's nobody building? And can you create that value? Or is there a valuable company out there that you could create? Perfect competition versus monopoly. But what you want to invest is really a monopoly. The kind of market that is so good at what it does, no other firm can even offer a close substitute. If you want to create a capture lasting value, don't build an undifferentiated commodity business. You got to invest in monopolies. Monopolies, moats, they protect themselves either through innovation. It's not about monopolies because of political regulation or whatever. Monopolies because they're dominant, because they're good at what they do. We'll discuss a lot of these monopolies. Now, what has worked in the past? If you want to make a lot of money, it's never about quickie trades, but it's about decade-long booms. I talk about these things a lot. Invest in mega trends. The Industrial Revolution, railroads, electricity, oils, cars, communications, Silicon Valley, that were in the past. Railroads had United States literally. Rockefeller filled the days and nights with light through Standard Oil refining businesses. These were the richest men in America. Did you know that in the last 10 years, the richest men of America are self-made? Where was Facebook then? Where was Jeff Bezos then? 1997, do you know the net worth of Jeff Bezos? Watch out for transformative forces, disruptive innovation, technology, megatrends. These force companies to reverse fortunes. So you know this, Tesla already beat the market cap of Ford and General Motors. So $17 to $1,000, $1,700, 100x your money in 7 years. Focus on the margin. Some companies will make 35% profit margins on a good day. Others make 55% profit margins on a bad day. Now, actually, there are even some companies that make 90% margin on a bad day. How about some people who make 99.99% profit margin? Games. Stock market teaches you the hard way. It's all in the margin. Some could sell a patent-protected pill that costs pennies and then sell it for $10 a dose. Hollywood would sell, it used to be before, DVD discs for $19.99, costs $1 at most to manufacture. How much does Netflix produce, cost, and then scale it in the realms of hundreds of millions of subscribers? How much, guys? Megatrends, let's talk about revolutions. Computers were not just for boring accounting functions. They could augment the human race, increase efficiency, productivity, replacing costly, repetitive human functions. That was the real scale. Now, from computers, we went to mobile phones. That was the S-curve. I talked in my session a few Fridays ago, if you recall, I talked about the wearables, the next S-curve, the next 100x move, smart glasses. Characteristics of baggers, this isn't even baggers. We're talking about 10x, 100x moves. As long as the fundamentals of the cycle still scale, what would double or grow exponentially every year, these are your monster markets. Management keeps improving. People say, wow, 100% growth last quarter, another 100% growth, and then another and another and 100% growth. Microsoft went $1 billion to $50 billion revenue in 7 years, even when Amazon had $100 billion already. How big was cloud? So big. Strong edge too. Now, making money investing is allowing yourself to be wrong. Because being wrong frees you up. Allow yourself to be wrong because that will make you right. What do I mean with this? You want to bet on great technologies, monster markets, but you don't want to go all in. Why? Because there's a ton and you could be wrong predicting the future. Predicting the future is actively tracking while passively holding. I'm going to discuss a few things as well. It's not about knowing secular trends. You also have to know pretty decent is a million times away from insanely great. You want to be in the insanely great. When people discuss buying wonderful companies at fair prices, the reason why we have upside here is that wonderful companies usually go from great to greater to insanely great. It's going to be a winner take most market. Nobody can ever catch up because the moat is so huge. We love a lot of these businesses, guys. You know why C Limited is a huge, insanely great moat. Who's gonna catch up? Lazada? It's fine. They can both make money. The closest and almost sure thing in the world is this: to make money, buy and hold a great company. If you could get an insanely great company, even way better. But you don't buy and ignore. You don't close your eyes. I just bought it and then forever I'm gonna just be in the golf course and be rich. That's not making money. You know what you bought. I can ask you tomorrow, hey, did you know that this company made this and that? I thought you liked C Limited. Do you know what Shopee did last week? Do you know what Shopee did last month? Did you know what Free Fire did last week? Last night? Do you know those things? If you really want a great company, you are aware. Now, John Rosebeer said, I got a share of Apple when I was a kid. My dad paid $14 for it. Now we'll have 448 shares after the split. Buy and hold, you all. There's a lot of things in that one single line. A lot of people know Apple. This is your Apple. Let me show you the chart. It's funny, 1996. Of course, a lot of stock splits, guys. 50 cents to $5. That was what? 1999 bubble. 10x in 1 year, 2 years. Fell down to $1. 2001 to 2002. From $1, okay, guys, from 2002 to 2003 to 2020, were there any significant pullbacks in Apple? Not a lot, really. Those numbers look nothing. $1 to $400. But what do you learn about this? 50 cents to $400. 800x your money in Apple. Sounds like fairy tales, guys. But this isn't a fairy tale. This was a company that went almost bankrupt to the greatest, most valuable company in the world. Steve Jobs, I miss him a lot. I love him. I'm pretty sure you miss him too. He said this: your work is going to fill a large part of your life, and the only way to be truly satisfied is to do what you believe is great work. And the only way to do great work is to love what you do. If you haven't found it yet, keep looking, don't settle. As with all matters of the heart, you'll know when you find it. We all love Steve Jobs. It was funny that in 1998, 1997, Steve Jobs actually talked to some of the developers and he said, guys, you know what our problem is? Our product sucks. Let's make America, no, not America. Let's make Apple great again. Our products suck. They don't have sex in them. That was Steve Jobs. He said that. He had so many products, but nothing. Nothing. Question is, do you have an insanely great product that people love? That would scale. Michael Jordan, he was one of the greatest players, not even one of he was the greatest of all time, right? His incredible greatness was paid 300% higher during the 1998, 20% higher than the entire team. And even the people who paid him that high felt they underpaid for the GOAT. Check to the stats of an outlier, Mr. James Harden versus the rest. What's the concept of these stats? Whether you're a basketball player or not, winners win. By excellence, never sell. I didn't put here the Taylor Swift, but I put it in my Spotify. She just made another all-time high every single day, right? Every single day, She breaks the records, eighth album, boom, another record, all-time high on Spotify streams, all-time high on albums sold, winners. Michael Jordan, GOATs. People equal companies. Not just one person, but the entire culture that they cultivated, even when they're gone. Even when Kobe Bryant's gone. The culture, the work ethic, insanely great. To be insanely great, to be excellent. When you find those few winners, it's very rational to expect people will win greatly and they have enormous yield outperformance, and you are stupid to sell your winners. You will regret your decision, I tell you. Long-term karma, bad karma will happen to you when you sell your winners. Few people in this world are ever able to be the best at what they do forever. And the list of people that are, usually they love what they do, and you can rarely find yourself in a competition to begin with people like them. Try to play basketball against GOATs. Try to play against them, you die. You want to get killed? A stock's price would rarely equal a true value of a company. There's inefficiency in markets which you can always exploit. One such inefficiency is the so-called neglected firm effect. Stocks that are less followed by analysts tend to outperform the ones getting most analyst attention. Okay, this is my Spotify, who's talking about wearables as the next smartphones. What Taylor Swift and Billie Eilish taught me rest stocks. Who's Billie Eilish? Went from 1,000 plays to 1 billion plays in 3 years. As a stock, you'd have 1,000x your money if Billie Eilish was a stock in the last 5 years. I think Serens is not looked at a lot. You can actually listen July 27, July 4, June 28. I don't podcast a lot, but doesn't matter. February 12, I still said, you know what? Why does Zoom deserve to be in your portfolio? Sure, you could say, well, Nikki, everyone knew that Zoom was going to be great. To be honest, as of February, not a lot was talking about it. We discussed February 11, which online names would be so resilient throughout the coronavirus. Nobody actually was bullish Jumia. Yeah. January 28, talked about it. Youtao. Should Youtao be on your portfolio? December 6. Should Youtao pens, Xiaomi devices, what's happening with that? China's online education is growing. December till today, Youtao, 400%. I asked December 5, hey guys, what does Corvo do? Let's explore the different stocks benefiting from the 5G revolution. Okay, this is not me bragging, okay? But people ask me, Nikki, can you tell me what your picks are? Okay, Youtao, December 2019. We were aggressively saying, guys, Youtao, 12, 13, 14. This is a great company. Buy it. Tada, $40. People are still saying, maybe it goes $100. Coolern, bought it at $10. Online education, guys. We said this. This is not me bragging. Okay, I'll tell you what. Online education, what's my next pick? Pluralsight. We said buy it at 17, 18. Just last night, made earnings call. Great work. 7% up. Will it be $100 name? We'll see. I like it. I have it. I had Youtao and Coolern as well. So there. Roku. Okay, a lot of people like this name today. Doesn't matter. We liked it then. I don't care if you like Michael Jordan 1991, 1992. I'll still like it 1997, 1998. So I don't care if I like Roku at 2018, 2019, 2020. I'll still like it 2021, 2022. Yeah, Roku. How many people cover it? Yeah, a lot of people covered it at $40. Not a lot. Then more people covered it at 60. Then more people covered it at 100. Went to 170, made a fall. Still a great company, so keep on buying. At 60, at 80, at 100, at 120, at even 150. I don't think that it's ending. Study it for yourself. Livongo Health, yes, 25. I'm sorry I didn't held it actually all the way. But yeah, we caught this one too. Billy, millennials, Generation Z, China. Okay, at 22, yes, we liked it. At 41, I still think I like it, but there's a lot of streaming platforms, and but this is about the Generation Z. So there's a huge change, and the Generation Z are all in Billy. ZTO Express was kind of normal for me. To me, it was obvious that ZTO Express was going to do well because of the surge in all this e-commerce. So it didn't need a pandemic for me to believe in ZTO Express. We bought it at 18, 19, 20, but of course the pandemic accelerated everything, so it's 100% up. StoneCo, I guess this got prominence because Warren Buffett invested at 24. Doesn't matter if you buy with Warren Buffett. Yes, we bought at 24, 26, rallied to 45. We never really cared if it went back down at 24, buy again. Some of us actually sold at 30, 40, okay? So there were reasons why. As I said, it's not a buy and hold and do nothing, buy and ignore. There was a 30% gap down here because of Banco Brazil Itaú. Then it rallied because of great earnings. Then at these levels, there was a bad earnings call. You could have exited even at 40 or 38 and got back in at about 25. So all of these things, you can actually buy and sell and still remain in play with the cashless transaction world. Of course, can you only make money in neglected names? Sometimes a company is neglected temporarily. Remember last year when people were talking about Disney Streaming Plus? They neglected the moats, the reasons why Netflix was a secular buy. And so there was an opportunity to buy at 270, and we still had a buy again at 300. Do we have a lot of proof of winners? Am I making a humble brag? Well, you can just take a look at January 8, proof of winners, 2020 and 2019. And you could actually back read a lot. So this is not me trying to brag, but people just told me, Nikki, why am I going to believe you if you can't show me anything? So show me the money. So there. Okay, so can you make money on existing winners? Of course. Amazon, what a beast. Today, the numbers are incredible. Revenues are up 40%. And we're talking about free cash flows of $40 billion for the quarter. The revenues of Amazon was about $90 billion. Amazon created 170,000 jobs in March. The thing about this is that there's a lot of things that you would love about Jeff Bezos. Let's take a look at, I gave almost a love letter. Who isn't in love, okay? I don't care if you love him, I love him, we love him. Doesn't matter. Okay, when I wrote this letter, a love letter, of course, Amazon was already 400 times. Wisdom from the successful internet giant. Since 1997, Amazon has risen from $5 to $1,800 per share. Of course, reading his annual shareholders' letters was a better way than to study MBA, honestly speaking. Just learn from the greatest entrepreneur in the world. 2017, build high standards into company culture. 2016, move fast, focus on the outcomes. 2015, do not deliberate over decisions. 2014, bet on ideas that have unlimited upside. 2013, decentralized decision-making to generate innovation. 2012, surprise and delight your customers, build long-term trust. 2011, self-service platforms unlock innovation. 2010, R&D should pervade every department. 2009, focus on inputs, the outputs take care of themselves. 2008, work backwards from customers, need to know what to build next. 2007, missionaries build better products. 2006, nurture seedlings, build lines of businesses. 2005, do not get fixated on short-term numbers. 2004, build free cash flows, enables more innovation. Long-term thinking is rooted in ownership. Which company do you know went 25x for their R&D and still is investing a lot in R&D? Amazon. 2003, long-term thinking is rooted in ownership. Build your business on your fixed cost. Measure your company by your free cash flow in lean times. Build a cash moat year 2000, year 1999. Build on top of infrastructure that is improving on its own. Stay terrified of your customers. I love everything about his lectures, okay? He is a genius. some of the most liked stuff I love, okay? Personally, 2014, 2012, 2011, 2005, 2003. Also required reading, just the recent letter of Mr. Jeff Bezos to the US House Committee. Let's talk about 2014. This guy taught me a lot about investing. Bet on ideas that have unlimited upside. A dreamy business product has at least 4 characteristics. Customers have to love it, and then it can grow to a very large size. Then it have to have strong returns on capital. It has to be durable in time and with the potential to endure for 10 years or more. When you find one of these, do not just swipe right. Get married. Love it. Own it. Get married. What was that company, guys? What was he buying 2014? Know what? That was Twitch. Be aggressive about placing bets on dreamy business ideas. You will have failures, but sufficiently big winners that will more than make up for all of your wrongs. Do you know that if you make a mistake, it's just 100%? If you make a win, it's going to be 100x. And the truth is, even if I have a failure, I don't even need to lose 100%, guys. I could lose like 20%, but if I'm making 50, 100%, 200%, 300%, what do I care about losing? Allow yourself to be wrong, because if you allow yourself to be wrong, you have so much room to be right. Be aggressive about placing bets on dreamy businesses ideas, online education, streaming, remote work, video conferencing, streaming delivery, online delivery, food delivery, even before anyone wanted it. Okay, many relationships, particularly business ones, require bold moves to get going. To find true success, you have to commit for the long haul. The problem is these moves do not just appear risky, they're very hard to rationally justify at all. Example, Jeff Bezos was building an online e-commerce business. 1997, he said, we're gonna sell books. You know, 1997, nobody had a smartphone. Nobody had internet. I live in the Philippines, guys. My internet is the bad, worst. We don't have 5G here. We don't have smartphone here. I need to take 1 hour just to load email. There wasn't even email then. It needed a lot of imagination to believe in Jeff Bezos. And now, all the ways Amazon has unbundled the bank. We've got Amazon Pay, Amazon Cash, Reload, Amazon Lending, Amazon Rechargeable, Amazon Go, Amazon Prime with Visa, Amazon.com store card. You've got checkouts, you've got drones. 50% of everything delivered is actually Amazon. Amazon Protect, Amazon Marketplace, Amazon Allowance, Amazon Go, Amazon Alexa. It's like everyone, he invaded everything. Amazon Health, drones. When your risk tolerance is high, you can bet all over the map. Do not be worried. Do you know how I bet? I don't even bet on one name. Sometimes I'll bet 30 names, 25 names. There was a time I actually had 50 names, and my dad told me, Nikki, you have so much, you're so spread out. And I said, Dad, you know, some people have 500 companies. It's called the S&P 500. Your daughter is choosing 50 names, and I carefully chose it because there's like 10 secular trends at the moment, at least. The reality is right now I have 17 secular trends. There's so much trends happening right now. There's so many medical breakthroughs. There's so much breakthroughs in the innovation space. Innovation, organizations want to make data-driven decisions. They often have a very difficult time with placing risky bets because they don't have clear quantitative evidence to support them. And if they did, there wouldn't be a risk of failure. There wouldn't be experiments. There wouldn't be such a big upside. Did you know that Bill Gates invested in our alternative meat industry since 2009, 2010? Yeah. So he was willing to bet on Patrick Brown, Ethan Brown, also cellular-based meats. Technology, innovation. He believes that environment, we will run out of places to have a lot of grazing cows. It wouldn't be sustainable. So we need to develop plant meat alternatives. And more, and more. By the way, I love Bill Gates too. Solution, place your bets where your downside is capped, but your upside is unlimited. If I put $1,000, how much would I lose? Realistically, $1,000, even if I'm wrong. If I'm like 100% wrong, like, oh my God, you bought a crappy business, $1,000 is gone. But what if I'm right? My $1,000 goes $3,000. What do you think if I know if I'm right? Would I just have $1,000 there? Wouldn't you think I'd add on my winners? $1,000, I'd add another $1,000. That would skew everything such that if I have a winner, I add on my winners, and then the upside is unlimited because we're talking about 10x opportunities here. Naturally, of course I'm going to make money. For Bezos, the best bets are dreamy businesses. Customers love it. So Marketplace was a dreamy business. Amazon Web Services was a dreamy business. Cloud computing. Amazon Prime was a dreamy business. It was a risky idea. He charged $114 or 100, yeah, and then people loved it. Same day shipping, recurring model, SaaS, software as a service. That was Amazon Prime. And now Walmart is copying the business model, Walmart Prime. So on subscription business model. Customers love it. The potential is large. Very strong returns, possibility to endure. That's the business of telemedicine, teledoc, 20x in 5 years. We always overestimate the change that will occur in the next 2 years, but we underestimate the change that lasts and occur in the next 10. That was Bill Gates saying it, to the road ahead. Let me discuss to you a very important concept. What is the diffusion of innovation theory? This is a hypothesis outlining how much of technology and advancement spread throughout societies and cultures from introduction to wider adoption. So the diffusion is a theory that talks about the timeline where it spreads out over long periods, and the way in which this innovation is communicated to different parts of society is where it occurs, it's developed, it is correlated to market share. If you know the diffusion of innovation theory, you can easily invest and know that Zoom was going to be a blockbuster stock. That's simple. February, it was 80 to 88. February 12, I wrote it in my medium.com/@NikkiU. I podcasted it in my Spotify Facelesstrader, and I tweeted it. So I did it all. I also Vibered it. So I wasn't like saying it to myself. I was like broadcasting to everyone who wanted to listen. I said why Zoom is deserving to be there in your portfolio. Okay, $80 times 3, $250. It's all about the diffusion of innovation. Innovators, 2.5%. Early adopters, 13.5%. Early majority, 34%. Late majority, laggards. If you are entering in the early adoption phase, you are very early. Doesn't matter what the market was paying for. If you knew that it's going to go bigger and bigger market share, it's going to be global, you'll make money. It's that simple, right? Because Zoom before COVID-19 was here and Zoom after COVID-19 was here, you knew what's going to happen, right? Take a look at some data. October 2019, there was about 14 mentions of Zoom video with a purchasing intention. What happened? From 14 to 250, that was early 2020. That was an amazing increase. You see that chart, it's so stupid if you don't invest in Zoom. I even think about my investing precepts as Nikki just doesn't need to be stupid because it's so common sense. An accelerating pace through the adoption curve indicates enthusiastic consumer adoption. Oh, by the way, Jeff Bezos created Amazon because he didn't want to regret. That was it. He said that 1997, he left a cushy investment banking position. He was given all the money in the world, guys. He did it because he just didn't want to regret. He believed in the internet. He believed that he would sell books and everything. He believed in it so much that he didn't want to regret. You actually need to read Jeff Bezos Required Reading. Read it. I posted it. In my Twitter, just find it there. Anyway, so an accelerating pace through the adoption curve indicates enthusiastic consumer adoption. Companies with dramatic acceleration through the adoption curve can become extremely lucrative investments due to the multiple earned advantages. Zoom didn't have to advertise. That's why free cash flow margin in first quarter was 76%. That's why it was up 169% in the quarter. Charts to show why Zoom will just keep making all-time highs. May 18, I was still saying before earnings that it was going to be a growth stock. Nobody cares. Nobody cares about valuation because it's going to keep on growing. Now, a while ago, we talked about industrial revolution, the electricity, the oil, and all that stuff. Do you know how fast revolution innovation is adopted right now? Take a look. 1903 to 2019, how fast was the water heater or the landline or the tablets or the cable TVs, the washing machine? How about the smartphone usage, vacuum, refrigerator, electric power? So it used to take 30 years, 40 years. If I can make a global adoption of video conferencing within 10 weeks, if I conquered the world, not just Asia, not just America, the world in 10 weeks. I conquered the world in 10 weeks, guys. I'm the global pandemic social network. Of course, it's going to be valued highly. It's just common sense. Is it not common sense? Is it not? It's common sense, isn't it? First-time installations of Zoom's mobile app have skyrocketed 78% since March 2, 2020. 700%. So before this data came out, we're saying at February, guys, February 11, February 12, isn't this the most no-brainer stock in the world, Zoom video? Anyway, but even if I felt that it was a no-brainer, take note, I don't do all in. So actually, a client said, Nikki, if it was such a no-brainer, why don't you go all in? Like, why don't you just bet all the ranch in the world? And then I said, you know, investing is not about going all in. You can put 5%, 10%, 15%, but maximum for me is 50% of your net worth. So you decide your net worth. It doesn't matter what your net worth is. If you're $10 million net worth, then put $1.5 million. If you have $100,000, put $15,000. So if you have only $1,000, it still made sense to have $150 in what you believe in. Okay. So of course, a lot of people know Shopify. It was obvious, right? If you are enabling e-commerce, yes, we said Shopify 375 was a great buy. It fell down to 300. There was a drawdown. But of course, now, you know, Shopify keeps on making a lot of all-time highs. Were we late? To be honest, Shopify is your Cinderella story, right? Your fairy tale story. Take a look at 2014 to 2020, even on April only. Oh, from what? How much your sales? How much your gross merchandise volumes? From 40,000 merchants to millions and millions of merchants and still continuously growing. How many people do you think are going to go online? 3 million, 4 million, 5 million, 10 million, 100 million stores? So if you're asking me, why does it keep on going all-time high? Maybe I should ask you, how many millions merchants is the total addressable market, okay? Video chat apps. Unlimited app side, no? Upside. House Party got bought out. Take a look. It used to be that Zoom was a small player, 4 million. 59 million was Skype. House Party was 100,000. Pandemic started. What happened to Zoom? Ta-da! Obviously, Zoom was also the most downloaded app. Then it was TikTok. House Party already got bought out, guys. So it's privately listed, probably paid 100x already in the private world. Or if it wasn't paid 100x, then the buyer made a killing, right? Okay, so there. Video conferencing apps, you could see Zoom was way ahead over the last 3 years, even before the COVID pandemic, from January 2016 to October 2019. It's kind of like people are saying, well, Kobe Bryant, I knew that he was going to be the great Mamba that you know today, Black Mamba, since he was like 16 years old. Did you see the work ethic of that guy when he was like 14, 15, like 12? He was nobody when he was 12. And by 14, he was top one from zero to number one, beating everyone in his class for basketball. That was how good he was. Outliers. Don't you think that this was an outlier chart? When you see something like that, that is a clear buy signal. I buy charts. It's just a different chart that I probably look at. It didn't matter if people didn't see the chart that I was seeing because this was an obvious buy chart. It was a buy. And people who knew it, of course, knew that they were right. Growth and downloads of video conferencing apps, Zoom, Microsoft Teams, House Party, Hangouts, Meet. You know, sometimes House Party went 2000x, 400x because House Party started with very low base. Like a while ago, we talked about cotton, 150,000 to 5 billion pounds of cotton. See, we're talking about small bases here. Zoom from 4,000 people doing Zoom 7 years ago. How many people are doing Zoom now? 300 million participants and maybe 500 million participants and more. That doesn't mean that 500 million participants are paying. Maybe like 1% of them, but that's still 5 million, diba? 5 million paid. Zoom's Twitter following, that already tells you skyrocket. Zoom video is the Billie Eilish of our time, guys. That was so clear. Was it not clear? It's so clear as day. Now, of course, some people know the obvious and they just highlight their love letters in the realm of just cover pages. Amazon here, success, 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 success. Business, success. Wired, success. Amazon, next move. Why do you think people would write all these cover pages? Do you know that there used to be an indicator? They were saying, if you put the market in the headlines like Time Magazine or Forbes Magazine, like if you put their bull market, that was the end of the bull market. If you put bear market there, that was the end of the bear market. Now, let me give you a key indicator, guys. A guy that is talked a lot in success magazines. You don't write an article about a guy's success magazine just because you like him. To repeat that, if I'm talking about Taylor Swift all-time high records every day in the chart, that's because she is successful. Do you want to make money on other people's success? That stock market's for you. Invest in their companies. Isn't it that simple? Bezos Unbound. He was making all the top all-time highs year in, year out for the last 23 years and still kicking everyone's butts. Amazon's next revolution. America's best leaders. The 100 most influential people. From 1997 to 2003, he went from nobody to the richest guy in America. Let that sink in. Let that sink in. Oh, it wasn't just a few magazines. It was just so many. Times Person of the Year. Look how geeky he was here. Inside the Mind, Fast Company. Future is in my hands. Now, that's the same thing with Zuckerberg, guys. Facebook, next big move. Wired. Success, Fast Company. Wired, Weekender. Now, Fast Company, Geek Power, Time. Facebook hits puberty. For those who aren't aware, Facebook went from about $40 IPO to $20, and then now it's $250, 10x your money in about 7 years. And guys, he's less than 40 years old. Can he continue to make 20 years successful moves? What's your bet? What's your bet? Now, the thing is, some of my idols in the world aren't even being given the proper attention that they should have. That guy is Mr. Forrest Lee, guys. C Limited. So, coronavirus pandemic, everyone's playing Dota, Garena, Free Fire. Who's the owner? Forrest Lee. Game for Garena, Singapore's answer to Tencent and Alibaba. A billionaire forged in Free Fire, which is the Fortnite of Singapore or Southeast Asia. He's already the richest guy in Singapore. What happens if he becomes Southeast Asia's richest guy? What do you think? He could be, right? C Limited. And like all billionaires, Mark Cuban has a basketball team. He invested in Singapore's Premier League club. When you're a billionaire, you can actually buy things you love. Sea Limited started just last year, 2018. We got in 2019. I studied 2019, but I still highlighted it 2020. So, a winner doesn't stop being a winner. 40, 50, 60 doesn't stop. Even at 100, we still promote and buy because Southeast Asia penetration rate is less than 5%. And if you look at e-commerce, it's heading towards 25 to 30% penetration rate in the next 5 to 10 years. So, revolutions. E-commerce revolution. It's happening. Why will you miss it? Despite the breakneck pace of Shopee and Garena, Forest Lee has not garnered any Time magazine cover yet. It shows me that there are still very few paying attention to how much potential valuation this company can grow to become. Dips should be bought. Any company price should be bought. Now, nobody even discusses my heroes, guys. I'm so sad. My heroes aren't discussed. Colin Huang, the son of a factory worker. Meet Colin Huang, China's youngest self-billionaire. The Pinduoduo IPO, nobody cared. Well, a few of us did. China's richest 2018. Can you imagine being so young and becoming the richest in just a few years? He was one of the top 20 richest in China when he was, 35 years old. Can you see how young he is? Son of a factory worker. Son of a bitch. Pinduoduo. We bought here at 19. Went to 99. 500% in 1 year, guys. In 1 year. E-commerce. Secular trend. Great company. Insanely great company. I love the earnings. I love the results. So there was no reason to not talk about how great the company was. I remember Colin Huang also blogs. You can actually follow him on his own Medium blog. That's how good these guys are. But actually this year, he already resigned from being a CEO. He's going to be a chairman, probably doing something else. Now, Eric Yuan was in the Forbes list as Agents of Change. Would everyone please mute? Bloomberg Businessweek. So he garnered 2 magazine covers. So I think this is just the beginning, guys. Zoom video isn't yet taking over the entire world. Not yet. Cyberpunk CD Projekt is already a 100x move. But before that magazine, Cyberpunk CD Projekt went from $3 to 450, 133, 3 to 400, 133x in about 10 years. So there's a lot of people that's actually doing well if you actually find great companies and great leaders and their own innovation. Free Fire, as I said, you don't just buy and hold. You want to buy and buy more. If you see that the company is doing so well, May 15, Free Fire, they're working on the same server. What do people think about Free Fire Max? And there was a lot of great numbers. Every single day or every month, C Limited publishes a lot, like the sensor data downloads. You could see everything. Eh? So this is important stat. 2 p.m. Inc. said, there are decades where nothing happens and there are weeks where decades happen. Vladimir Lenin. So 2009 to 2019, this is Bank of America, U.S. Department of Commerce. They were saying that from 5% to 16%, then 27%, that is e-commerce. Of course, all the numbers in Shopify, in Amazon confirm all of these numbers. Same for PayPal. So will we go 50% market share on e-commerce, guys? What do you think? You answer me. Adoption in normal times, adoption during a crisis. In normal times, it used to take a long time. But in a pandemic, the adoption goes kaboom. What used to happen in 3 years happens in 3 weeks. Changes takes time, but then suddenly, ever again, that fast. Just fast. Now, this is JD.com, also online e-commerce giant #2 against Alibaba. Now, robust growth in China retail used to grow 10%. This is the first quarter 2020 slides. It was highly fragmented before. You had top 20 retailers, market concentration. In China, So 18%, but in US, it was very monopolized, 48%. But with increasing online penetration, what's gonna happen is that the three leaders, your Alibaba, JD, and Pinduoduo, will dominate everyone, leading to significant online growth. So the online retail market size would go up, up, up. They were expecting 1.2 to 15 by 2023. But that's wrong, right? Because by 2021, it's already more than 20 trillion. So they're expecting 15 trillion yuan. The only offset to this growth, guys, is people are losing their jobs. So how could you spend, even if you want to spend online, you don't have money? So that's the question. Top 10 listed retailers in China, you've got JD, Suning, Sun Art, so a lot, right? Of course, Kager, 31%. So market leadership. Top largest retailers in USA. So this is where Amazon is actually saying that we haven't even broken the sales of Walmart. Well, maybe not. But actually this quarter, Amazon already got 90 billion. So it's hitting $400 billion soon. Can you imagine that? And by the way, guys, Walmart is also doing well online. So does Costco. I didn't read on the Walgreens, but I know Kroger's had like triple-digit growth. Home Depot, CVS, Target, Best Buy did well, right? You remember Best Buy reported earnings very strong. So, okay, I don't need to bore you with these, but these are all common sense, right? Gross profits increasing, more scale means higher margin, operating profit, and so forth. You don't even need to advertise because people are wanting to just be online. I think one of the best things to note is the penetration rate. Accelerated adoption, I said that this was going to go from 1.2 trillion to 15 trillion. It's going to become faster. And the last mile delivery reach. This is important. Last mile. So you've got delivery all over. So ZTO Express does well. All the Express. SF Express, ZTO, YTO, XTO. I forgot the other one. But those are the top. You can actually invest in ZTO Express. No, those are just easy picks. Superior services through nationwide logistics network. Now, we need to focus on what is now possible rather than lamenting what isn't. If you want to make money, what is possible? What's possible? Ask yourself, be positive. Where will I make a lot of money? Now, I want to share, this is from Benedict Evans, February 2020 report. It's actually a very good, he's very good. Like, if you want to be winners, you have to follow winners. That's simple. Surround yourself with winners. Benedict Evans, he reported this on his Twitter page. He also has his own website. He also has his own subscription model if you want to follow him. He's got great insights. He said, there are 5.5 billion adults on Earth. 5 billion have a smartphone. 5 billion have a phone. 4 billion of that has a smartphone. Mobile phones, smartphones. Can you imagine that? And if you have a phone, what do you do with your phone? You get to entertain yourself. What do you do with a phone? Watch porn? That's also true. But of course, when you have your phone, e-commerce, people shop through their phones. People sell things on their phones. This was a 2019, no? E-commerce is big. At that point in time, it was $600 billion. But, okay, if US, $600 billion, is that big? The total addressable market of US commerce, $600 billion, surely you'll say, no, it should be trillions of dollars. If China can have 15 trillion yuan, US can consume a lot. Like maybe it has to be like $1 trillion or more, right? So actually, the addressable retail is just 16% as of 2019. That's why we were saying the 16% e-commerce penetration rate went 27% and it could go 32%. So now the question is tech valuation insane? You answer me, guys. I keep on giving you data. I'm sure you're not dumb with all these types of data. Now, globally, what's the market share of US? And what's the market share of India, Brazil, Russia, Germany? Hell, I can't even see the Philippines out there. Southeast Asia is not even there. Southeast Asia was not even in the data point. We are people, We're 700 million people here in Asia, and it's not even there. So now how much is the C limited again, guys? So 100? Can it go 1,000? Maybe. China, 25% market share. US just went 27%. This data, this statistic is not updated. That was February. In 3-4 months, where did we go? Where did we go? D2C explosion. Okay, I'm also seeing this. This is a huge trend. Baby care, food, beverages. Everyone, even the dinosaurs can now order online. The dinosaurs are now paying cashless transactions. The prehistoric boomers. It used to be a hard time for me. I think that this is such a, the buy signals that really make me so confident with my picks was, I'll tell you what, I am so happy that my parents who are 60 plus years old are now shopping online. That's how big the total addressable market is. I know it. These anecdotes. Several hundreds are now online first brands. What do you think would happen to Shopify? Seriously. I tell myself, yeah, how many merchants are going to use Shopify? It's a global e-commerce enabler, not just US. And how much would, so like it tells you all the e-commerce enablers will make a ton of money, right? So part of me is asking myself, why is Baozun not given attention, guys? E-commerce enabler for China. Why? Is it 15 trillion yuan? Is that not important? Are we neglecting that data, guys? Why? I have a question. Why is Shopify up 50 times in 5 years? Well, look at the gross merchandise value. At this point in time, it was 60 billion. Just yesterday, just 2 days ago, Shopify went all-time highs because Shopify had grown 100%. $120 billion of sales on the platform. And so my question is Shopify, guys, a $5,000 company in 5 years? Will sales online in Shopify, where it gets a cut, gross merchandise value, it gets a cut there, will it become a $500 billion sales category? Or is it a $1 trillion sales category? Now you ask me, I ask you, you answer. You answer with your portfolio because that's how you should vote. Adoption and crisis. In this crisis, technologies that were still mostly bought by early adopters, from home delivery to teleworking to AI-assisted office work to offshoring to live captioning to disaster preparedness, are suddenly immediately everywhere. A crisis makes us all early adopters. And here's the key. We get second order benefits right away. We get to skip a cycle. We don't wait 3 years. It's here. It's here. So people are saying, we went from 1929 to 1999. So what? We went there with fundamentals, guys. And I believe there's so much discounts. I believe that SoftBank will be $100, the cheapest company in the next 3 to 5 years. Why? Because in the Philippines, we use Grab. We use TikTok too, guys. And Grab and TikTok is inside SoftBank. So does Diffusion. So there's 100 great companies inside. It's the cheapest. You've got TikTok, you've got Grab, you've got Arm, you've got Flexport, Airbnb, Oyo, Fanatics, Diffusion, just to name a few. There's like 88 companies out there. It's a gem. A few names, Coupang, Paytm, Cabbage, Globality. I discussed this freely. There is a video I made, how to buy TikTok and Grab at a massive discount. The answer is SoftBank. Why am I angry? Because Filipinos are not investing in these great, wonderful leaders, even if I say it straight in their faces. That's why I'm angry. I'm angry because Filipinos are unaware. They're uneducated. I hate it. And this is free. Buy businesses, great businesses, not great valuations. Great businesses don't come cheap. You want to pay for a Michael Jordan and make money? Pay him 300%. He said, I'm not worth $3 million. Pay me 10 million. Pay me $20 million. I don't care because I'm going to pay the best goddamn. I'm going to have your championship. And he did, right? He did. Buy excellence no matter the cost. Sell mediocrity. Tenets of great companies for long-term investing, the total addressable market serves a quick metric for the underlying potential of a given opportunity. So, I tweet a lot. It's fine. You can follow me on Twitter, Facelesstrader. So I said, okay, what's the potential? Question, ask yourself. Number one, is there an ample opportunity for this company to grow from here? Can it grow? Just because it grew from $1 billion to $60 billion doesn't mean you're ending it. Is it going to go $100 billion revenue? Is it going to go $500 billion revenue? Is it going to go $1 trillion revenue? Now, is a company at an early stage or at a mature stage? Shopify is not early, but Shopify is not mature. See? Amazon is showing that it is not mature. See? If a company's products are at a late stage in the mature cycle, then are they the best offerings available? If it's not in the mature cycle, you have great runway ahead of you. Is the industry growing? Ask yourself that. Is the growth of the company accelerating? Isn't 100% accelerating enough at a great breakneck? Are you talking about $1 billion revenue? Or are we talking about $100 billion revenue here? To grow 40%? You kidding me? Is the company growing its share of the market? Yes. Is the competition fragmented, disorganized? Does the business have alternative business avenues to pursue? Of course. Look what happened. What happened? Domination, right? Amazon is conquering everything. Are these different avenues attractive, open for competition? That's why Shopify is the competitor of Amazon. See? Can you envision multiple futures for this company? Can this business model scale up without expensive reinvestment? Have I spent considerable time examining the growth opportunities that this company has in front of it? When I read this question, the answers to me that, it popped up. Oh my God, that's Roku, that's NVIDIA, that's Zoom, that's Tencent, that's Netflix, that's Spotify, that's Shopify. Diba? Even Amazon still has potential. Now, I would like, I said today, I would like to reward great people and generously give them my money. Same with stocks, same with life. I don't care if I pay a premium. If they're so goddamn better than average, why the hell do I think? You think I'd worry if it was expensive? Valuations, I don't care. This is a good idea for you to share. Mostly borrowed idea, so I retweeted it. Notes from Facebook, second quarter 2020 call. You know how many daily average users today? 1.8 billion. How many monthly average users? 2.87 billion, up 12% year on year. If you're in the billions category, Coca-Cola would love a 12% year-on-year average. Coca-Cola barely makes 1%. P&G barely makes 1%. I'm sorry, guys. I know your numbers. I'm sorry if I know your numbers. McDonald's, can it grow 12%? I'm sorry, guys, no. With billions, 9 million active advertisers, 180 million businesses use FB products. 180 million businesses. Let that sink in, guys. Let that sink in. The tech industry is an American success story. Products we built have changed the world for the better and improved people's lives. The majority of people, let's reflect on this. Let's reflect. We have seen a fundamental difference how the vast majority of people actually experiences our services. And the impression you get if you read much about the commentary about Facebook is that it's bad, it's bad, it's bad. Imagine going through the pandemic 2 decades ago when the internet was nascent. Facebook didn't exist. Sheltering in place is now disruptive. But until recently, it would have meant no connection to your friends in a broader economy. I wouldn't be able to Facebook Live this without Facebook. Most of the small businesses whose storefronts had to close would have gone under. And there wouldn't have been another infrastructure like the internet that would make them stay afloat. I've seen some entrepreneurs, I've helped them. They were saying, Nikki, can you help me? I said, I can't help you, but Facebook can help you. Go online, sell online. People are on Facebook, sell to them, on FB, on IG. All the dinosaurs in the world, they're asking for my help. Like, I know digital marketing. I said, oh, you know what? Do YouTube. Do a live stream of your products. People share their day-to-day experiences with friends, communicate in groups with people, share interests, watch entertaining content, buying and selling things. This is how the vast majority of people use our services. Yet some wrongly assume that most of the content on our services is about politics, news, misinformation, or hate. Let me be clear. It's not. They make up a small part of content on our services, although there are all things that people will generally tell us that they would like to see even less of. We do not profit from misinformation or hate. And we do not want this content either on our platforms. People come to our service to connect with people they care about. That is why people use our services at record levels now, and enabling more of these meaningful social interactions is how we succeed. Who is the biggest competitor of Amazon and Shopify, guys? Let me answer that to you. Facebook. Facebook. Again, Facebook. And we have a plan. Let's further reduce the amount of harmful content. Our AI systems already proactively identify about 90% of hate speech that we remove before anyone even reports it. And no other internet service does anything remotely as sophisticated as this. We are committed to continue to improve. Amazon, somebody's after you. The guy's Mark Zuckerberg. It's incredibly disappointing because it seems like in the US, we could have avoided this current surge in cases if our government had handled this better. 50% of our employees will be remote in the next 5 to 10 years to save costs, but also to attract broader talents because it is not mutually exclusive. So guys, if you're talented, how about applying to Facebook? Because hundreds of millions of shops would have to be on Facebook. And so Facebook would hire, of course. WhatsApp business grows from 5 million to 50 million, 10x. Why? It's a simple product. It's good. There's a ton of demand for people to interact with businesses. I talked to this traditional dinosaur, okay? Forgive me if I call you guys dinosaurs. I try to tell them, how about you work on Zoom video? The good thing is that most of the dinosaurs actually adopted Zoom video. I'm not going to talk about the apps that they didn't adopt because I don't want to badmouth some of the apps that they can't adopt. It is too difficult for me to explain it to them. And because they cannot adopt, I realized, okay, so that app will never fly. Because if a dinosaur cannot adopt it, then it's not going to fly. Then I asked them, hey, do you have a Facebook page? And do you have a Facebook Messenger? And then they said, yeah, I do have Facebook. So okay, I told them, okay then, let me help you. Make a Facebook page, put your stuff there, and then you live stream, you do a lot on your Facebook and your IG. You make your shop your Facebook page within 5 minutes. It's a good thing that their kids know how. Boomers can survive because Facebook is there. Agree? Of course, 2.7 billion people are there. Now, 1 out of 3 companies did not have a website in the USA, but they all need to be online. They can set up an FB or an IG page in minutes. If a dinosaur can do it, everyone can, guys. It doesn't take rocket science. 1/3 of small and medium businesses report millions, 25% of sales coming from a digital channel in the last 30 days. Facebook can do a payment stream, guys. PayPal should be worried. Visa, MasterCard should be worried. You know, they wanted to do that, right? The Facebook was supposed to have their own Zuckbox. They called it Libra. It didn't happen because US said no. The regulations said no. But the reality is, I think they were afraid. They were so afraid that Zuck was going to be trillions and trillions of dollars worth. E-commerce giant, payment giant. What's going to happen to my currency if everyone's using Zuckbox to transact? I don't know about you, but I'm feeling 22. Anyway, Top 100 advertisers contribute 16% of ad revenues, which used to be 20% 4 years ago. Small and medium businesses is the key and focus. Q2 ad impressions up 40%, average ad negative 21%, hiring is up 32%. We repurchased $1.4 billion stock. You know what? I didn't want this to seem like I am a Facebook cheerleader, but what's a 500% move in the next 5 years? I don't know if it's Facebook. Do I care? Well, all I know is that it's gonna go up. I don't care if it's 500%, 50%, but I know it's not 10%. That's what I know. Now I can take the first part. Let's see what Zuckerberg said. Of course, this Zuckerberg, he feels that he is being hated so much. I can take the first part. I can take the blow. Cheryl can take the second one. In terms of the big milestones for small and business commerce, we are mostly focused on two types of products. The first is shops. We started rolling this a lot more broadly this year. And what that basically allows is that any small business you put in a catalog and then have a shop across Instagram and Facebook to start with will eventually be across all the apps. We'll be able to bring up a shop. We'll be able to transact across all of them. And we're building up Facebook Pay to make it so you can buy something in place once your credit card is stored. Oh my God, are you scared now? Facebook Pay. It's easier to do follow-on transactions in any of the apps. It will be a better consumer experience and sales will convert better. There will be natural value for small businesses. Oh my God, I am after my 1 hour time limit. But guys, I prepared 100 slides. Please stay tuned, okay? You're gonna make money, so just stay in tune. Don't have dinner first. Okay, there will be a natural value for small businesses to connect the advertising that they are doing across their services with their shops, to be able to go from inspiring someone to the top of the funnel, all the way down through driving sales. So that is going to continue scaling. And we will have more to share in the metrics on that soon. The other thing I'm excited is messaging e-commerce. What we are seeing there is that particularly important, and especially in developing countries, we're seeing a lot of people do business over Messenger and WhatsApp. So we already offer the business API, and that will be meaningful. There will also be clicks to messaging ads. What's more important and successful is that we will be able to get customers' attention, especially Facebook and Instagram, and direct them to a thread where they can do commerce and messaging. Messenger to start, Facebook Messenger. As payments grew across Messenger and WhatsApp, we are able to roll that out in more places. I think this will only grow as a trend. We're very much focused on two areas, and we really are focused on e-commerce. Who's gonna beat Amazon again, guys? Who do you think so? I think it's Facebook. I think it's Facebook. Yes, people said, amazing. Facebook can grow in value. Of course, you've got 2.7 billion users. If I can just make $20 off of one person transacting, what's the GMV? 3 times 20, 60B. Within a week, within a month, within a year, Facebook can do what Shopify did in 10 years. Easy. Thanos. You know, I wish that they actually put in this last dance Elon Musk, because solar energy is such a big trend and nobody is still like understanding it the way I do, the way we do. Sometimes you get so ines na because the world is just so, sometimes I feel that the world is stupid, or if they're not stupid, then I'm just, I don't know, guys. There's some obvious values here. It's not expensive. People say it's a bubble. What do you see that I don't see, guys? Or what am I seeing that you don't see? Let's see. One of my idols is Richard Driehaus. He's a father of momentum investing. I love guys that think like me. Or I think like them. He said, you know the misconception that I hate so much? Richard Driehaus says, you know that buy low, sell high? I suck in that. That is stupid. You don't make money and buy low, sell high. He said, you make more money, buy high, sell higher. In fact, I'd say buy high, never sell. Why sell a great company? Buy high, sell higher is his trait. Buy high, sell higher is the best money that you could make. I've made more money in companies that went 1,000% up already than companies that fell down 90%. Why do I want to be with a bankrupt company? Why do I not want to be with Facebook, even if it went from $20 to $250, if it's gonna go $1,000 anyway? It's obvious. There are stocks that are in demand by other investors, and they will keep on making all-time highs. And they will keep on having positive relative strength. Obviously, the risk is I'm buying near the top. If I buy at 250, the world had a Congress hearing, they're going to penalize Zuckerberg, we need $100 billion from you because we know you're rich. So give me money. Those are things that the US politicians can do, which is a regulation, right? We hate politics. You and I both hate politics. They disrupt. They don't create value. Anyway, so those things can happen. And so what? I don't care. Even if Zuckbox goes down 20% for a 200% move, so what? Put $1,000, it went $800. Okay, put another $1,000. Just buy stocks of good companies and hold on to them. Now, I believe that he says this, just buy stocks of good companies. That way, you don't have to pay close attention because the good names, you don't have to always pay daily attention. That's true. I do look at them on earnings, quarters, 3 months, or minsan 1 month after. But you have to know if there's an unfavorable change. Monitor them daily or even weekly, but they will give you the long-term changes. Business value does not equal the stock price. Things are always changing. Yesterday's good company will not be tomorrow's great investment. Or yesterday's great company will still be tomorrow's greater company and greatest company of the world. Now, people said, don't try to hit home runs, Nikki. You will make money just by hitting a lot of singles. Wrong! Wrong, wrong, wrong. You make the most money hitting home runs. 10x, 100x, 1000x moves. I don't care if I'm wrong. Because if I'm right, I'm going to make 10x, guys. Do not try to hit home runs. That's wrong. Try to hit it. Amazon's trying to make unlimited upside. Facebook is trying to make unlimited upside. Why do I care if that target price is 10% up? I don't make money in 10%. I want to create target price of 500%, even if I wait 5 years. So we both agree to disagree in not trying to hit home runs. Sorry. The name of this channel is Awesome 10X. We try to hit home runs all the time. All the time. I'm not bragging. That's just the reality. I believe that you can make the most money hitting home runs, but you need to have discipline to avoid striking out. See, this is where my discipline comes from. I tell people, how about find 20 winners, 15 winners? Let's put 5% each, 10% maybe. If you truly love the company, how about 15% of your net worth, of your portfolio? And even then, we talk about asset allocation. This is your stock portfolio, this is your cash portfolio, and then you have a property portfolio because you never know. Sometimes a property, it used to be before pandemic, you would have gotten passive rental income in a property, but now you can't. And then of course your business. Like this is my business too. I charge 2,000 pesos a month. I charge $40 a month, and it's scalable. If I have 100 listeners, then that's good. If I have 5 listeners, five viewers, that's good. The best way to make money for the business is to help other people make money too. That's really my business. I help people make money. The best way for my bottom line is to help the other people's bottom line. But I could be wrong. So I try to cut my losses and let my winners run because that is a paradigm too that works. So yeah, I do cut my losses. I could be wrong. Do I have some wrongs? Okay, so far, I'll show to you later because I have 100 slides. We're not yet done. The biggest lesson from this crisis is that the unexpected sometimes happens. The correct strategy is not to try to predict the unpredictable, which is futile. Nor is it to just own internet companies, which is simplistic. It is to have sufficient reserves of strength to weather any crisis. See, you don't just bet on a Facebook, on a Zoom video, or whatever you learned from me today. I couldn't predict the COVID pandemic. I'm not investing in companies because I know what's the future. I wouldn't know every single day what's happening in the future. What I do know is that there are inevitable trends. So that's how I should invest. Great companies, insanely great companies. And just to prove my point, why I don't care about valuations. Winners always win. Stop complaining about valuations. Let's discuss Mr. Benedict Evans. See, I love promoting winners. Benedict Evans, he also charges a few dollars per month. You can follow him if you want. He has his own website. Google, November 2005, he said YouTube is worth 10 to 15 million dollars. A year after, actually just 3 months after, he said, Google said, maybe it's 50 million dollars, maybe it's 300% higher. A week later, they said, maybe it's supposed to be 200 million dollars. But they want 500. Eric Schmidt said, CEO of Google, maybe we shouldn't pursue. But in May 2006, Google said, hey, YouTube just kicked our butts. So in October, he said, heck, let's just buy this. It doesn't matter. $1.65 billion. How much is $1.65 billion versus YouTube's $10 million, the original bid? That's how much? 165x in just a year. How much does YouTube make today? A quarter. You know what? How much? Let me give you a number, guys. YouTube digital advertising in a single, I'm not sure if it's a single quarter, if it's a single year. My numbers might be wrong, but it's $15 billion. 1.5. So Google actually got it cheap. Even if you bought it at 1,000x, you got it cheap. You paid Google paid for YouTube at $1 billion. That was so cheap. Facebook bought Instagram for $1 billion. That was cheap. Because in year 2006, nobody believed in the business of YouTube, where you're watching me now, 14 years ago. These are some of the classes that you'd see inside Centenex. I try to do it simple, like a Netflix of investing education. So I talked about this month, July 9, I talked about the business of love. I talked about Blue City and Momo. Should we swipe right or get married? Geely Auto, is it the poor man's Tesla Model 3? I talked about June 25. Should we electrify your portfolio with electric buses, trucks, vehicles, batteries, charging stations? So of course, yeah, I did discuss your favorite Tesla there. Of course. And that wasn't the only time that I discussed Tesla. Of course. But sometimes I don't like to talk about your favorites because everyone talks about it. It's not a neglected stock. We just love it, right? Everyone loves it. Semiconductors, yes, I discussed Xilinx. Yes, I discussed Velodyne LiDAR, which is Graph, the eyes of the driver. Some of the companies I discussed is Agora. I discussed Tattooed Chef. I discussed Canadian Solar. I discussed CrowdStrike, Ceragon, Cerence, the rise of retail brokerage firms. That was a free class. I discussed Interactive Brokers, Charles Schwab, Robinhood, la la la. So 7 p.m. Thank you for listening. I hope you learned a lot. And I hope I gave you an idea. And I hope it didn't seem as if I was making money while I'm sleeping. Making money while I'm sleeping is easy when I've done all the work, right? So if you invest with Awesome 10X, it's $40 a month. Invest in your education. Invest in the greatest companies in the world. Maybe I'll help you if you don't know how. There's a ton. Let me make a self-promotion here, all right? Give me a second. This is my medium.com/@Nikiyu. I write there once in a while. I tweet a lot. So you could follow me on Facelesstrader. You can also, inside, of course, I have my Slack. This is for the paid members. So I do entertain questions. People ask me a lot of things all the time. There is a summary page. I've helped a lot. And it's not a humble brag. I love to make money, but more importantly, I love others to make money at the same time. I love people to make money. What's wrong? What's wrong with hiding your wealth skills, okay? I help people make money too. what else am I saying? Okay, so yeah, I share charts. You could see it naman eh, it's here. And then of course, let me share to you some of the things in my Spotify, okay? So I do have a Spotify. Wait lang, where is it? Share screen. Um, Desktop. Wait up, guys. Let me share my screen. So here you go, Spotify. So you can just find me, Facelesstrader. You can actually listen in my past. I make timeless stuff, guys. I'm pretty sure that uh, even if you listen to my October 2019 or my September or my August or my July, it's gonna help you out. So there, I'm proud of my work. Um, I love insanely great companies, and I'm actually happy to actually do what I do because this isn't work for me. I'm happy to find something I love. That was Steve Jobs. Steve Jobs said that you don't want to settle. I love teaching people how to make money by investing in great companies, and that's me, Awesome 10x. Hashtag Awesome 10x at Faces Trader. My name is Nikki Yu. I'm from Manila, Philippines. I'd be willing to teach globally. So thank you for watching. Please share, subscribe. I want more viewers. I just have what? 1,000 viewers? Pathetic, right? I have sometimes just 100 viewers. I hope that we increase our tribe.